Folks, that is right. We're talking about 4 dividend stocks I'm looking at buying today. Now, for the sake of this, we're looking at higher dividend yielding stocks. We're talking about 4+% on all 4 of these. So this is one thing that if you're into the income investment idea, this is one that's definitely a decent option for you. Dividend income investing, certainly a different option than your typical dividend growth, where you typically see a little bit lesser in terms of yields, but longer term growth. Now these, while they're higher yields, they offer a little bit more dividend income in the meantime. Pretty nice if you're just looking for some supplementary income and have some discretionary funds to invest in some stocks. So let's get right into it. And I think this goes without saying, we're starting off with the cream of the crop. It's going to be Realty Income. Look, I like this stock quite a bit, and I think you know I do. This is obviously known as the monthly dividend company. Great company here. And really everything they do. So a little bit about the stock, obviously. This is a stock that gets money, obviously, off of, it's a real estate company that gets money off of, obviously, lending to tenants. So tenants stay in their properties and pay them money. So great thing to see. If you look at the stock's performance, always worth looking at. In the past year, up 4.38%. In the past 5 years, up 6.5% only. So not significant. But the drop, as you can see from the highs of mid-80s down to where it fell in 2020, which was ridiculous, by the way, into the low 40s, you can see a massive dip there, and it's had to recover really since that. Since really the low period there at 57% is pretty nice. But this is typically a stock that trades relatively stagnant. It's not crazy in terms of gains, but I think it should be, and that's why I really like this stock, because I think overall fair value isn't quite there. You see a market cap of $26.7 billion on this company, but you see a beautiful revenue line here, right? It's a beautiful line of revenue. I don't know what to say. If you ever have seen an ideal chart for revenue, it's right here. It's beautiful. It's beautiful. And not only are you seeing massively growing revenue on this company, one thing that's really nice is really a way of measuring the company's ability to pay the dividend is based off AFFO, otherwise known as adjusted funds from operations, pretty well the net income line of these real estate investment trusts. So here you can see that we have seen annually, it continues to rise. You go back to even 2010, we're continuing to rise up from there. Every single year you've seen gain. Even through last year, which was a crappy year for them because a lot of their tenants weren't even able to pay, they still managed to raise AFFO. All things considered, I think that's pretty significant. And you see this dividends paid line also continues to increase. This is a company that very much prides itself in dividends paid. And they have a very diverse portfolio of tenants. They're in many different industries. I think overall they say 50 plus different industries. But again, core clients, we're talking about Walgreens, the clients that never go away. Walgreens, Walmart, Sam's Clubs, 7-Elevens. They have a lot of great clients that they take care of. So, all things considered, they have a great portfolio. I feel confident about the dividend. And you look at the dividend history of this one, this is what I really like on this one. Again, the monthly dividend company focused on paying dividends monthly. They've also got a 24 years growth on the dividend. Since their listing, they've been growing the dividend. That is a beautiful sign, in my opinion, because they are committed to that regardless of what happens. We went through a financial crisis. We went through, obviously, last year where their tenants were hit pretty hard, and they still rose the dividend through all of it, even through the dot-com bubble. Here they are doing it. 5-year growth rate of 3.6%. They don't grow the dividend massively each year necessarily, but it's still yielding 4% at these levels. I like this one not only for the yield, but also I believe there's great potential in terms of market gain for this company. Because you see, prior to 2020, this was a stock that was approaching the $90 range, mid-80s. So right now sitting at $68 a share. I think there's plenty of room to grow on this one. My next one's going to be ABR, one that certainly, if you know me, I've got a massive position in this one, and it's made me a lot of money. I've made a lot of money off of ABR, not only in terms of dividend, but also in terms of market gain. You look over the past year, this is a stock that's up 53%. In the past 5 years, up 144%. This is really great performance out of a real estate investment trust company because of the fact that typically they pay much higher yields and the stock price typically lags. But this one has kind of just said, screw you, I don't care about what you're telling me. Massive dip again you see in 2020, which is understandable given all things considered. We're talking about the $4 range for now an $18 stock. I really like this company, not only for the market gains it's given me, but you look at the revenue line, and they've really been able to turn it up. When you look, really, this is from 2016 onward, great, massive boost in terms of the revenue line for this company. They've been doing great things as far as their portfolio. So very smart people leading this company. We also see consistently everything. I mean, you see 5-year trend on this from sales and revenue to operating income, consistent growth there. Net income line, that's right, consistent growth. It's a great 5-year trend. It's what I really like to see. I mean, I really like seeing it. I don't know what else you want me to say there. EPS line, yeah, you're looking pretty good. We're talking about 5 years of growth, baby. Even through last year, again, I really like it. And if you look specifically at dividend of the stock, it's ridiculous. This is a company yielding nearly 8% with 9 years of dividend growth and a 17% growth rate in the last 5 years. This is a company that is making a lot of net income. They're paying out a lot of it, and you're getting a fantastic yield on it. I think the stock itself is still undervalued at these levels. So really nice to see. It's a quarterly dividend payer, but it pays a massive dividend, and I think it's one that can consistently be paid. Payout ratio is pretty low. It's incorrect right here. Seeking Alpha has it incorrect, but it is still very low for what it could be, all things considered, for the massive yield that they pay out. I love ABR. I think it's a great, great stock. Next, we have Main Street Capital, another monthly dividend company, too. If you haven't heard of them, they're a business development company. A little bit different from a real estate investment trust, where these type of companies will invest in smaller companies and really reap the benefits and rewards of them succeeding. Main Street Capital, if you look at the stock, last year's performance up 35% so far, pretty significant. We also saw a massive dip. So in the last 5 years, only up 20.4%. Still not bad, all things considered, given in the yield on this company. We saw a massive dip of 60+% in 2020, and they were able to recover pretty strong since then, back to pre-pandemic levels for sure. Revenue on this company is something that is ridiculous. We saw a big issue last year solely because of the fact that there really weren't many startups for them to invest in necessarily. These were companies being forced out of business by the government. They weren't letting them operate and do business, right? They told you couldn't operate, you had to be shut down, screw you. But they still managed to keep revenue relatively flat, and I love it. And they've been able to raise it to pre-pandemic levels and above that even as of the last quarter. I really like it. Now, net income did get affected quite a bit last year, and I don't think that's a shocker at all. They weren't able to invest their assets, so that is kind of where you see this issue. But since then, they've managed to grow massively in terms of the net income line, and they're way beyond the pre-pandemic levels already. And I think this will be a trend that continues for this company. I really, really like it. If you look at the yield itself, once this thing wants to not. This is a 5-year growth rate of here of 2.64%, 6% yield, 0 years of dividend growth technically, but if you look at historically, that's not necessarily their fault. Mostly it's because of the fact that we see these special dividends that have been paid out historically, typically once a year prior to 2020, and we'll see if that gets reinstated. I'm not sure what that looks like, but overall dividend has been nice and very consistent historically. So if you even look 10 years out, it's a historical consistent raise in the dividend. Looks beautiful. Finally, we have a non-REIT, no REITs here or BDCs. It's AbbVie. I've talked about this one quite a bit too. So AbbVie is a stock that they are a drug maker. a biopharma company, if you might know them as that way. In the past year, the stock's seen 19.4% growth. In the past 5 years, up 71%. I think there's no one just kicked their desk. It didn't hurt at all, I promise. It only hurt a lot, and I'm going to die probably. 5 years, up 71%. Pretty significant progress and gain in the last 5 years, I can't lie to you. And if you look at the stock as a whole, it's one that's trading very, very cheap. We're talking about a forward PE on this company of 7.7. That's a very cheap forward PE on this company. I think it's still trading very cheap to where it should be, all things considered. And obviously, if you look from a revenue perspective, they've been absolutely smashing it lately. Absolutely smashing it. And I'm not really concerned about that. I mean, there's always talks of we're going to fight big drug prices. Let's be clear, this administration will not be fighting anything. I mean, come on now, he can say he is, but he's not running the show. I don't think much is going to be getting done in that aspect. They're always all talk and no show. It's just kind of how politics works. No one's really been able to do it. Donald Trump did it a little bit. He tried to fight big drug prices, but again, it's tough to see. It's tough for people to do it, especially when politicians are getting a lot of money from these guys. So it's hard for them to actually go with it. They'll say it to get the votes, but they won't necessarily act on it. So look at the dividend on this company. It's a beautiful one. 4.8% yield is really nice when you're talking about capital gain as well. 8 years of growth at an 18% 5-year growth rate. It's a beautiful quarterly dividend payer. Payout ratio is only at 4%, so there's a lot of room to grow on this dividend too, and I think they'll plan on continuing to grow it, all things considered. That's my 4 stocks I'm buying right now. I hope you have a great day and enjoyed this. Have a good one.